Hello, I'm Rachel Jones for the Finance News Network. Joining me today from Centuria Industrial REIT is fund manager Ross Lees. Ross, welcome back.
Thanks for having me back, Rachel.
Now, first up, for those unfamiliar with your fund, could you start by giving us an introduction?
Centuria Industrial REIT is a real estate investment trust or REIT, and we're listed on the Australian Stock Exchange under the code CIP. We own a portfolio of 37 high-quality industrial facilities located around Australia, with a portfolio value of about $1 billion.
And now to your 2018 results. What were the highlights?
It was a really exciting year for us. It was the first full year under Centuria's management, and we delivered a huge amount of leasing, and our result was really underpinned by that. We leased nearly a third of our portfolio during FY18, and that really helped underpin our return on equity, where we delivered a standout 17.2% return.
Thanks, Ross. And now to your portfolio in more detail. Can you provide us with an update on your properties, their location and your tenant profile?
Yeah, so we have a portfolio, as I said, of 37 high-quality industrial assets located around Australia, with a really strong weighting to the dominant markets of New South Wales and Victoria, where 66% of our assets are in those markets. The portfolio is underpinned by really high-quality rent payers. So the key tenants that underpin our rent and our distributions are companies like Woolworths, Visy and Aurora.
And what about the key metrics of the portfolio?
So our leasing result, as I said, was a record for us, and that really drove up a number of our key operating metrics. Our portfolio occupancy is at 94.5%, and our weighted average lease expiry is now over 5 years, and that's really a market-leading statistic. During the year as well, we were really focused on deleveraging our balance sheet, and we improved our gearing by nearly 5% down to 38.4%.
Excellent. And what are the key themes and trends you're seeing on the market?
Well, the industrial asset class has probably been one of the most dynamic real estate classes over the last year or two, and that's really being driven by the penetration of online retail in Australia. So we're now starting to see 25% or so compound annual growth rate in online spending, and it's industrial real estate that's becoming required to give the solution to our retailers as the consumers start demanding much more rapid delivery times and the requirement for inner industrial property to support that distribution network. Against that backdrop, we're actually seeing a stronger climate for manufacturers as well. The lower Australian dollar, combined with improvements in automation and technology, are really making onshore manufacturing a more viable option. With both of these factors combining, we're seeing a lot more weight of capital from both local and foreign investors to get set in the asset class.
And last question now, Ross, what's the outlook for FY19?
Well, the fund's really well positioned now. The leasing work that we've undertaken in FY18 positions us really well. We only have 7% of the portfolio expiring this year. We've got an opportunity to lease up our existing vacancies. Off the back of that, we're expecting distributable earnings in the range of 18.5 cents to 19 cents per unit, and our distributions are forecast at 18.4 cents per unit.
Ross Lees, thanks for the update.
Thank you.